Hello, everybody. My name is Alicia Garcia Herrero. I'm part of a consortium led by Merix and the Business School of Copenhagen Business School, which does research on China for the European Commission. The name of this consortium, which Bruegel, which is my affiliation, senior economist for Bruegel. The name of this consortium, as I said, is DWORC, which is dealing with a resurgent China. We have a second name, if you don't like the first, which is China Horizons. So there you go. This consortium has been doing quite a lot of research, like Reconnect, which is, of course, the consortium which is offering these wonderful courses, online courses in China. Well, we've been doing quite a lot of research, part of which is research on the Chinese economy, which I actually lead this type of, we call it working package, this section of our research. And why I think, dealing with the Chinese economy is important to understand China. Well, because a lot of China's success, if you think about what China has achieved in the last 30 years, and kind of a theme in Deng Xiaoping's mindset about China is the economy. It's really about developing an economy that is successful in a way for the Chinese Communist Party to have a contract, if I may say so, with its population. China is not a democracy, but China has been offering a lot of growth to its citizens, and it has lifted more than 400 million citizens out of poverty. Surely that it's probably much more as of today, but point is, this is kind of a Faustian deal, if I may say. Well, give me your freedom, I give you economic wealth. Now the question is this going to continue? I think it's a very important question for the future of China. And this paper that I'm going to present today for 20 minutes is called "Can China Defy Gravity?" And you can find it on the Bruegel webpage. I'm sure you'll receive it with the material for this presentation. So to be exact, the title is "Can Chinese Growth Defy Gravity?" So it's much more specific. So what do we mean by defying gravity? Well, we mean that generally economies, when they become richer, so China is already $30,000 per capita. This is quite high compared to many countries in the world. Of course, it's not high compared to average European countries, but if you go closer to, say, Portugal, China is already at 60% or so of Portugal's income per capita. So defying gravity doesn't mean that China cannot reach Portugal's income per capita. Surely China can probably reach that level according to our calculations. The point is at what speed. So can Chinese growth, economic growth, which we measure as GDP growth, basically in the literature, be fast enough to escape the middle income trap, which is another concept I want to introduce. So escaping the middle income trap means that you get to, say, $20,000 per capita at a speed that is rapid, that your economic growth is not too low, so that in a way you get stuck at that level, maybe even lower. Some countries are stuck at 10,000. So China has already moved past that. You can think of Mexico, or Brazil is even lower, but you can think of Turkey, for example. So to escape that middle income trap and to avoid this gravity, we call it gravity because every economy decelerates as they get richer. So can you defy gravity? It really means, can you grow faster than, say, 5%, something like that, for a very long time, even if your GDP per capita is 13,000 like China? Can you do that? that's very difficult. We're going to show in this paper that the country that defied gravity the most was South Korea, followed by Japan. And if things stand the way we think they will go, even if Chinese growth decelerates, which is happening since 2012, by the way, China will be maybe below Japan. Next one, you'll see the list. We have countries like Poland in Europe, very fast growth countries after $10,000 per capita. Our benchmark is $10,000 per capita. So the question really is, how fast will China grow, or is China already growing once it reaches $10,000 per capita? So we know a little bit because we're at 13, but how will we continue? How does it compare with South Korea? How does it compare with Japan, with Poland? And why? And of course, the key question is why? So in this paper, we're going to argue that China is decelerating less fast than many, but is not reaching, say, 20,000 as fast as South Korea, or very, very successful, even Japan economies when they were $10,000 per capita. So we need to go back to very long ago for Japan, the 60s, or quite a long time ago for South Korea. So why is this question important? Because again, this social contract, Chinese want to continue to see their wealth increase, their household wealth, the household income, and the party knows that this is a deal with the Chinese people. So knowing how fast China will continue to grow is really important. I would say more than for many economies where maybe you have changes in government, or but for the Communist Party, this is really, really, I don't want to say like threatening, but you know what I mean, like really, really a key concern. So on that note, I'm going to go through the paper. I think I've hopefully created some interest in this question. And the paper starts with a recap of China's growth story. So you're going to see there that China has been an extreme outlier, successful outlier, in reaching, say, $1,000 per capita. So it's in the 1 percentile. We calculate it this way. It means China has reached $1,000 per capita, so moving from extreme poverty to $1,000 per capita, the fastest on earth, really, in the 1% out of 100 cases in the world. So hardly any country has reached $1,000 per capita as fast as China. Then $5,000 per capita. Well, again, China is an outlier and is again in the 1 percentile. So hardly no country has reached that. So the beginning of China's growth story is extremely successful. Is it as successful as we move on? And the question is not as successful. So there's been a little bit of a kind of still on the 5% percentile or so, very successful, but not as successful. So you can see that on table 1. So we look at forecasting China's potential GDP. So let me explain. China's potential GDP really is how much China can grow, not so much how much China actually grew. Of course, when we look at the past, we calculate average growth. But when we look at the future, we try to figure out how much with the endowments that China has on labor, on capital, and the productivity on the labor side, labor productivity is on the table, and the return on investment, and something called total factor productivity, which is kind of the residual, what we cannot measure, where we try to measure the degree of innovation, the quality of institutions. So once we put all of that together, what's average growth in the future? So in this graph, we only show you the future. So what we have here is China will grow with 1 year left only, from 2021 to 2025, 4.9%. And that's about right. Of course, we had the pandemic in between, so it was a little bit difficult, but I think it's about, kind of about right. 2026 to 2030, lower. And this is not because we expect a pandemic, it's just because, as you can see from the sources of growth, China will be a little bit hit by labor participation, so fewer people, but most importantly, labor productivity is coming down. And you may say, can't be. China's labor is more and more productive. No, the question is not more, because this is a growth rate. You see what I mean? It has to grow every year faster. That's the difficulty. This is why there is gravity. Why do countries decelerate growth? Because they cannot become more and more productive every year. Can you become more and more productive every year? You are productive, but you cannot become more and more and increasingly faster. Yeah. So your productivity is faster and faster, grows faster and faster every year. So that's the difficulty. It's very hard to do that. And that's why countries stagnate in their growth when they are developed. So that's why China sees labor productivity coming down, even more so from 30 to 35. That's key table in this document, table 1. Speed up because I only have, I think, 8 minutes left. So I did tell you that that South Korea was an extreme case of success, and look at figure 4, how we measure this. So this is South Korea average growth since South Korea hit $10,000 per capita. That happened in 1994. It's not so long ago. It's a really successful country, South Korea, growth-wise. So you can see that average growth in South Korea since 94 to 10 years later, so 2004, was 5.5%. That's the fastest on earth. And if we take the numbers on table 1 and we average these numbers I just read out for you, China would be second. Well, we are increasingly doubtful that China will grow as fast as in table 1 because the headwinds for growth are extreme. So it is quite likely that China will appear in this table after Japan. Japan's average, which is 4%, comes from Japan in 81 to 91, because that's when Japan had $10,000 per capita in 81. So I hope you can read this table. And the question is, where will China be? By the way, it's not even only important where China will be, it's what Chinese households expect China to grow. Because even if we say China will be very successful, maybe Chinese households aren't happy with that level of growth because they were expecting more. So bear in mind that, this figure 4 I'm showing you is not one that people have in mind. If you see, people have in mind their previous income growth. Now they see less income growth, so they aren't happy. Yeah, this happens everywhere in the world, but China, I think the difference between China and most of these countries in this list is the degree of welfare state, which is much lower. So, Chinese households do not have protection in terms of pensions or unemployment benefits for much lower growth, while South Korea and certainly Japan had at the time. So I'm just saying that you cannot only compare growth to understand what may unfold as a consequence of the slower growth. So why is China seeing a deceleration in growth? So the first one is population aging. I already went through that. Let me tell you that, yes, population aging is very important. So China's is already experiencing depopulation. But the reason why it's not as important as people think is actually appears in the second paper that you can read on the Bruegel webpage on China's aging and the impact on growth. And we argue that because China has not yet fully urbanized, and by the way, the third plenum, which is the very important thing you should read about, the third plenum, which happened in July from 15th of July to 18th, came up with a reform, one of the reforms announced, which was to accelerate urbanization. And guess why? Because urbanization brings growth to China up to the point where urbanization cannot be pushed anymore because most of the population is in the cities. So it brings growth because you need to build more, you need to, people move from that transition, from rural areas to the cities, brings growth. So because even if the depopulation hits the rural areas, because those rural areas are not productive, as long as the population in the cities grows, this helps growth. So we are arguing that the reason why China will decelerate is up to 2035, which is when we think urbanization will be completed. If you read that paper, it's not really so much about aging. That's a very interesting issue because most people, well, and this figure 6 is a summary of our paper, which basically shows that, you know, if there continues to be urbanization up to 2035, the fact that the labor force falling will not actually will still contribute positively. This is the orange color, yellow orange on the left, to growth. It's only after urbanization is completed where it will be a massacre. The growth rate will have to be slashed by 1.3, 1.4% every year because of depopulation. Why? Because depopulation hits the cities, which are the productive parts of China. I need to rush. So why then is China decelerating so quickly up to 2035 if it's not depopulation? Well, because the return on investment, this is extremely important for consequences for Europe also, is coming down extremely quickly. So for China's, this is the idea of China's overcapacity that you read about. Because China has overinvested for years and years. And why has it overinvested? Because China was growing since 2008, the global financial crisis, big stimulus out of investment, 40% of GDP. Was that investment always productive? Well, increasingly less, because most of the things they were investing in were already there. So, you know, an additional bridge, no point in that additional bridge. I'm sure you've heard about this. So what is the return of that extra bridge? Zero, sometimes even negative, because it has, you know, it's creating, I don't know, negative externalities, maybe environment, maybe, you know. So because China's return on that investment is so extremely lower, and you will see here in figure 9 how much it has gone down only since 2017. Just imagine private companies, we divide private companies and state-owned companies. To start, the role of private companies in China has come down, as you know, certainly since 2017 and even earlier. So the return on investment for private companies in 2017 was only 9.3%, already, you know, lower than before. And for the state-owned companies, 4.3, difference, huge. So the more China moves to more state-owned companies, the worse it is for growth, because these companies are not as productive. But most importantly, even the private companies, which are fewer now, have seen the return on assets and return on investment come down from 9.3 to barely 3.9 in 2022. And actually, don't think this is the pandemic, because even a year where China was growing very fast, 2021, it was coming down very aggressively. And we expect, we're recalculating now 2023, it's even lower. So it's not about the pandemic. It's really about excess investment. The more China invests in a sector that is unproductive, so before it was real estate, now it's even manufacturing, a lot of overcapacity, the more China will see their growth decelerate. So I'm out of time, but I'm going to offer you one more minute to tell you the other reasons. China has piled up debt, humongously public debt. And we know that this debt is not productive again. So the return on assets of the investments of Chinese local governments are even lower than what I told you for SOEs. So it's 1.3 in 2022, it's very low. So a lot of that pile up in debt is unproductive. Another reason that there are scarring effects from COVID. So what are the scarring effects? Unemployment. Everybody reads about unemployment, especially youth unemployment in China. This is scarring effect from COVID, because there are no jobs anymore. It's very hard to bring people back to work, the laying flat story, etc. In figure 13, sorry, that was figure 12. Figure 13 is about the rise in the demand for civil service jobs, meaning people want to work, young people like many of you, I hope, want to work in the public sector. That's very strange for China. People wanted to be entrepreneurs, no more, because it's so risky now. So this is hugely important. And the final thing is, of course, geopolitics. Japan suffered from some containment from the US tariffs for Japanese vehicles, if you remember, in the 80s. But China's containment is much larger. Why? Because China is also a military threat for the US, so it's not like Japan. Therefore, there's a lot of headwinds that China is facing on this front. So what can China do? So the most obvious thing is innovation. This is why the third plenum is all about innovation, moving up the ladder. Why? Because the so-called total factor productivity I mentioned at the very beginning, which is basically that residual that I told you about, meaning what can China grow out of? Not labor, not return on assets, not investment, but something else, being productive in a different way, more innovative, more, creating new ideas. Well, it would look like it makes sense because China, and this is shown in the graph, has a lot of patents, figure 17, a lot of published, scientific publications, more than the US already. So you would say, wow, for sure, because China is so innovative. For sure, but it isn't really been yet seen in the increase in total factor productivity. Actually, on figure 16, you can see that total factor productivity in China is actually coming down, not up. That's very, very strange. Why could that happen? Well, last point, we have another paper, which is about bottlenecks in innovation, which look at why innovation in China might be less growth enhancing. And you can read that paper. There's many reasons, mostly about the institutional factors behind China's innovation and why, it might bring innovation for sure, and maybe moving up the ladder, export-wise, competing with Europe, you name it, but not necessarily more growth. So I hope you found this presentation interesting. Again, this is the main paper is the Chinese economy defy gravity, which I've gone through, and you have two parallel papers you can read, one on everything on either China Horizons webpage, which you get this consortium, or Bruegel's webpage, one on aging and the other one on innovation, the headwinds or the bottlenecks for China's innovation to be growth enhancing. So I hope you enjoyed this presentation. Thank you very much for listening. Thank you. Bye-bye.